Hello everyone, a lot of talk lately about silver ripping back through another major level because the Strait of Hormuz is suddenly being called open again, and the whole market seems to be acting like it woke up in a different world. So in this video, we're going to separate the emotional snap reaction from what may actually matter, and you are going to walk away feeling a lot calmer and a lot more confident in what happened. It is Saturday, April 18th in New York, so comment the day and date you're watching from. And if you value this kind of no-nonsense breakdown, subscribe and comment John A.G. Best down below. Because on the surface, this thing looks simple. Silver jumps hard. Gold moves with it. The dollar backs off. Oil gets smacked and then bounces. Stocks cheer. Headlines say shipping is open. Everybody takes a deep breath. End of story, right? Not so fast. Because when you get one headline moving silver, gold, oil, currencies, bonds, and stocks all at the same time, that usually means the market isn't calmly pricing reality. It's lunging at a new narrative. And lunging markets are exciting, but they are not always trustworthy. So let's start with the obvious. Silver had one of those sessions that gets attention even from people who haven't checked the chart in days. It pushed back through a big round number zone, traded up in the low 80s for a moment, cooled off, and still held a very strong gain by the close. Gold moved too, but silver clearly stole the show. That part is real. No need to pretend otherwise. It was a powerful move. And by the way, I am especially happy about the silver I picked up recently from my local coin shop, because when you buy physical and then you get a move like this almost right on top of it, you feel a little less crazy. You know what I mean. I'll show you those coins a little later because I forgot to include them before, and they're actually pretty nice. Now, what was the spark? The market tied the move to the latest development around the Strait of Hormuz and the ceasefire arrangement tied into Lebanon. The basic read was this. If passage for commercial shipping is open, even temporarily, then one giant fear hanging over energy markets starts to ease. Oil gives back some panic premium. The dollar loses part of its emergency bid. Bond yields soften. Rate fears cool a little. And once that chain reaction gets going, precious metals can rise right alongside it if the dollar is the thing doing most of the weakening. That is the part a lot of people miss. They think precious metals only rise when pure fear is exploding. That is way too simple. Gold and silver do not need the exact same fuel every time. Sometimes they run because the system looks dangerous. Sometimes they run because the currency side loosens up. Sometimes they run because real yields soften. Sometimes they run because traders get caught leaning the wrong way. And sometimes they run because all of those things show up together for a few hours and the tape just goes vertical. That seems a lot closer to what happened here. Based on recently published numbers, gold was up around 1.5% into the end of the session, while silver outpaced it by a wide margin and held a gain in the mid-single digits at its intraday best. Oil, meanwhile, got hit hard early, at one point dropping by roughly a tenth before clawing back some of that slide. The dollar index slipped back under the psychological triple-digit area, and yields leaned lower. So this was not just a silver story, it was a cross-market repricing. And here's where I want to challenge one easy conclusion. I do not think today's silver move automatically proves we have entered some clean, straight-line melt-up, where every geopolitical sigh of relief means metals rocket higher forever. That is too neat. In fact, some of the very same ingredients that helped spark this move today could later cool it down. Let me explain. When traders hear that Hormuz is open, they do not hear everything is fixed. They hear the worst-case inflation shock may be a little less immediate. That can hit oil. That can weaken the war premium dollar trade. That can bring bond yields down, and in that exact moment, metals can catch a tailwind. But if that calm starts to look durable, if shipping normalizes, if the risk premium drains out more broadly, if the dollar rebuilds a base on steadier growth expectations, then silver may not keep levitating just because it had one dramatic day. So there are really two stages here. Stage one is the violent unwind. That is what we likely saw. Fast headline reaction. Positioning scramble. People rushing to adjust in real time. Stage two is the harder question. What sticks after the dust settles? And right now, I don't think we fully know. Because yes, Iran's foreign minister signaled that commercial passage is open during the ceasefire window. That matters. But from recent market updates, shipping firms have still been asking for clarity. Insurers are still cautious. Some vessels tested the route and then hesitated. And military risk has not magically evaporated just because one statement hit the tape. There are still lane restrictions being discussed. There are still safety concerns. There are still reports of crews waiting for more confidence before committing. So the market may have sprinted ahead of what operators on the water are actually ready to believe. That matters a lot. Because if traders bought the headline faster than the real world can confirm it, then silver's first move can be stronger than silver's lasting move. Now I want to show you another reason this story got so much juice. Hormuz is not just any waterway. It is one of the most important choke points in the global energy system. Official energy data has for a while shown that roughly 1/5 of global oil and liquefied natural gas trade moves through that passage. So when the market gets even a temporary sign that traffic might resume more normally, it doesn't just affect crude. It affects inflation expectations, shipping psychology, central bank assumptions, risk appetite, and currency flows. That's why the whole board started moving at once. And that also helps explain the silver and oil comparison everybody loves to post. Yes, silver and oil got close again, on a nominal price basis, one by the ounce, one by the barrel. It's eye-catching, it's fun, it makes for a good thumbnail. But let's not pretend that is some sacred valuation model. It is more of a market mood photograph than a deep analytical truth. It tells you the two lines crossed. It does not tell you what either asset should be worth next month. Still, it is interesting, because it shows how dramatic the session was. Silver rising while oil drops, and suddenly the two are staring at each other across the chart. That's not normal quiet market behavior. That is a stress unwind, colliding with metals momentum. Now, another fresh angle here that I don't think enough people are talking about is the calendar. We are moving toward the next Federal Reserve meeting later this month, and the official schedule has that meeting right near the end of April. In other words, the market is doing all this repricing just as traders are about to obsess over every macro implication of cheaper energy, softer yields, and a weaker dollar. That timing matters, because if oil stays off its panic highs, the argument for emergency tightening looks less urgent than it did when energy was screaming higher. That doesn't mean rate cuts are suddenly guaranteed, not even close. It just means the market may feel less boxed in than it did during the worst of the energy scare. And when the market feels less boxed in, silver can trade more like a monetary metal again and less like a hostage to pure fear. That is a meaningful shift. At the same time, I would be careful about getting too comfortable with one happy ending, because the broader geopolitical picture is still messy. A ceasefire can hold until it doesn't. A shipping lane can reopen and still remain fragile. A diplomatic opening can look real in the morning and compromised by the weekend. And this market has been training everybody to chase every headline as if it is permanent. That is how people get whipsawed. So, what do I think happened today in plain English? I think silver caught a powerful upside burst because the market started stripping out part of the dollar's conflict bid, part of oil's panic premium, and part of the immediate fear around a full-blown energy choke. Gold benefited too, but silver had the extra torque. Why? Because silver tends to move like gold with an amplifier when momentum really grabs hold. And when traders start covering shorts or rotating back into metals exposure quickly, silver can look like it got shot out of a cannon. That does not automatically mean the move is fake. It just means some portion of it may be fast money, not settled conviction. And that distinction is everything, because if calmer conditions keep building, then I would not be shocked to see silver pause, churn, maybe even give back a chunk of the spike before choosing its next direction. On the other hand, if the ceasefire weakens, if shipping confidence falls apart, if new threats show up, or if the dollar resumes sliding because markets decide growth and policy are both getting shakier, then silver can absolutely stay elevated or push again. So this is not a one-answer market. It is a conditional market. And if you're successful, share your success story in the comments so others can stay motivated. Now let's widen the frame even more, because this wasn't just metals. Global equities loved the idea that the worst energy outcome might be fading. European shares surged. North American indexes pushed higher. Risk appetite came back in a visible way. Commodity-linked currencies perked up. The tone across markets was basically, maybe the nightmare scenario is backing off. That kind of broad relief can coexist with stronger metals for a while if the dollar is the thing getting sold. Again, that sounds strange to people who want one simple rule. But markets are not vending machines. You do not put in ceasefire and automatically get gold down, silver down. Sometimes the first move is about inflation pressure easing. Sometimes it's about the reserve currency losing its premium. Sometimes it's about rates. Sometimes it's just positioning. Usually it's a mix. And there's another fresh piece worth noting. Exchange updates this month showed silver futures activity running very hot through the first quarter, especially in the smaller contract complex. That tells you something important. Interest in silver has not exactly been asleep. So when you combine an already active market with a major geopolitical headline, you have the recipe for an outsized move. Dry tinder plus one spark. That's all it takes. One more thing. Earlier this month, gold had already been finding support whenever the dollar softened, even before this latest Hormuz shift. So today's move did not come out of nowhere. It landed on top of an existing market that was already sensitive to currency weakness and policy uncertainty. That is why I keep saying silver had extra torque. It wasn't lifting off from a dead stop, it was lifting off from a market that was already coiled. And when you add in the fact that some traders now think lower energy pressure could give the Fed more room later in the year, even if not immediately, you can see why metals did not need an all-out panic headline to move. They just needed the right combination of a softer dollar, calmer rate fears, and a crowded trade getting forced to unwind all at once, for a few explosive hours across the whole board, that day. Now, as for the longer arc, I still think people need to keep two competing ideas in their head at the same time. One, if the region genuinely cools off, shipping normalizes, and the dollar regains its footing, that could take some heat out of precious metals in the near term. I do not think that is crazy to say. But two, if the last several weeks taught policymakers and investors that supply chains, choke points, and strategic trade routes can still throw the whole system into chaos very quickly, then the bigger case for owning hard assets does not disappear just because one passage gets partially reopened. In some ways, that lesson gets stronger. That's the part that keeps this story from being simple. Short-term, relief can cool some of the fire. Long-term, the reminder of how fragile the global machine really is can keep a bid under metals that never fully goes away. So don't confuse the daily move with the entire thesis. Now let me show you the silver I picked up because I told you I would. I bought more winged Liberty dimes from my local coin shop, and this batch is cleaner than the last one. A few are really sharp, the kind that make you stop and look twice, even if you were only planning to buy bullion. I'm swapping out a few nearly there pieces so I can tighten up a full uncirculated roll, and honestly, that's part of the fun. Not everything has to be a macro thesis. Sometimes it's just nice to hold something real that was struck a long time ago and still looks alive. Drop your thoughts on that in the comments, because I know a lot of you care about condition almost as much as weight. So where does that leave us heading into the rest of the weekend? For me, this is still a wait-and-watch setup. If the open shipping story keeps getting confirmed by actual movement and calmer follow-through, the first spike in silver may cool. If the story starts cracking, the volatility probably comes roaring right back. Either way, I would not treat one explosive session as permission to shut your brain off. Watch the dollar. Watch oil. Watch yields. Watch whether ships actually move with confidence or whether this turns into one of those headline victories that looks bigger on a screen than it does in real life. That's the real tell. Because silver did hit a major milestone. That's true. But whether that milestone becomes a launchpad or just another dramatic checkpoint is a different question entirely. And as always, take this as education, not instructions. I'm just walking through the market the way I see it so you can think more clearly and make your own decisions with your own money.